This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC on Tuesday stuck to its forecast for relatively strong growth in global oil demand in 2024 and 2025 and raised its economic growth forecasts for both years, saying there was further upside potential. The OPEC, in a monthly report, said world oil demand will rise by 2.25 million barrels per day, BPD, in 2024 and by 1.85 million barrels of oil per day in 2025. Both forecasts were unchanged from last month. A further boost to economic growth could give additional tailwind to oil demand. OPEC's 2024 demand growth forecast is already higher than that of other forecasters such as the International Energy Agency, although the wider OPEC Plus alliance is still cutting output to support the market.
Oil prices fell in early Asian trade on Wednesday after a U.S. industry group reported crude stocks rose more than expected last week and as investors reined in expectations for interest rate cuts by the U.S. Federal Reserve. Brent futures fell 29 cents, or 0.4%, to $82.48 when the market opened at 0:00 GMT. U.S. West Texas Intermediate, WTI, crude futures fell 22 cents, or 0.3%, to $77.65 a barrel. U.S. crude oil inventories rose 8.52 million barrels in the week ended February 9, according to market sources citing American Petroleum Institute figures released late on Tuesday.
Moving on to the top news in the energy sector.
Prices of naphtha, a key petrochemical feedstock, have jumped in Asia as drone attacks on Russian refineries and the Red Sea shipping crisis have disrupted European shipments, trade sources and analysts said. The Asian spot naphtha price rose to $701 per metric ton on Friday after hitting a 10-month high of $747 in late January, well above last June's low around $500, as traders grapple with fallout from the dual conflicts. Damage in recent weeks to Russian refineries and a key export terminal at Ust-Luga, as well as attacks on Red Sea shipping that have led a growing number of vessels to divert around Africa, follows last year's rejig of global energy shipping in the wake of Western sanctions on Russia.
Poland has given assurances that it will continue to supply Germany's Schwedt refinery with crude oil if Berlin nationalizes the majority Russian-owned plant, German Economy Minister Robert Habeck said in Warsaw on Tuesday. Reuters reported this month that Berlin is preparing to potentially nationalize Russian energy group Rosneft's German activities, including its 54.17% stake in the Schwedt refinery, which Berlin put under a trusteeship in September 2022 in the wake of Russia's invasion of Ukraine. Habeck said on Tuesday the process to dissolve the trusteeship had begun within the government and was at the hearing stage. Next, we have the top news in metal markets. The International Energy Agency is launching a program to secure the supply of minerals critical to energy security, as demand rises fast while manufacturing remains in the hands of a few key producers, its executive director said on Tuesday. Fatih Birol said the production of electric cars, solar panels and other energy equipment requires a steady supply of minerals such as lithium, cobalt and copper. The IEA continues to keep an eye on oil and gas markets, Birol said, but the supply chain of energy technologies is an important emerging security challenge.
Prices of most non-ferrous metals eased on Wednesday, weighed down by a stronger dollar after hotter-than-expected U.S. inflation data dampened expectations for early interest rate cuts from the Federal Reserve. 3-month copper on the London Metal Exchange was down 0.6% at $8,210 a metric ton, as of 0217 GMT. The dollar traded near 3-month highs against major peers as traders pushed back bets for a first Fed rate cut following surprisingly hot U.S. inflation figures overnight.
We will now look at the top news in the agricultural sector.
Terms for the integration of Ukraine's agricultural sector into the European Union will be determined during negotiations, two ministers said on Tuesday, denying Kyiv was considering seeking an easing of the EU's Green Deal requirements. Earlier on Tuesday, A senior official told Reuters that Ukraine could consider foregoing the EU's agrarian subsidies in exchange for an easing of Green Deal requirements during accession talks starting next month. The terms of Ukraine's agricultural sector's accession to the EU's Common Agricultural Policy, CAP, will be determined during the negotiation process, Deputy Prime Minister Ola Stefanishina and Farm Minister Mykola Solsky said in separate statements.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.